All right, hey, good morning, guys. So as promised, I'm coming at you with a video just for today. We had our action overnight and to the pre-market. I'll touch upon that, but today I kind of want to talk about a few different things. First is going to be kind of what could set up a move like this, and just like a learning lesson, because like I said, I haven't really been like long the market as much, especially with derivatives. So something like this isn't really like surprising to me. But I kind of want to explain why this happens. I don't think it's really a bull bear scenario. So I want to get a little bit into that. I'll talk some about I'll talk some about just in general what I'm looking for structure-wise in the market, some next moves, potential areas to add, and monitoring, a pullback versus a correction versus just like a dip. Um, so I guess to come into today's session, I gave you guys the levels for the week, and I told you the conditions in which I would like update those levels. Um, as of now, I'll probably just tack it onto that post. I don't even think I'll do an individual post for today, just because after a move like this, either the market's gonna digest or the market's just gonna try to pick a direction and do its next thing. But um, for me right now, we had this previous consolidation on the daily here. We're pretty much like opening back up in it, so it's giving like coin flip vibes. There's been a bit of rotation ahead of this move down, so broadening of the rally essentially, but now you kind of have this dip after the broadening, and typically like the broadening is healthy, and I just think it's kind of interesting that it happened beforehand, so instead of it being we get the pullback and then you are able to rotate, kind of like you have these like big moves, IWM, Dow 700 points yesterday, and then you get this massive dip on SPY and Qs, and then those are pulling back, but the broadening kind of already happened. So as far as like, money is directly going from here to here, it's not really happening that way. And I think that's one of the first talking points I want to start with, just part of our general conversation, because today's more of a general conversation versus predicting price action and levels and whatnot. I think this can be informative for a lot of traders and kind of open their perspective. So when you have certain moves and certain moments in the market, people tend to think it's bull bear, and it's this battle, but in reality it tends to be more of a battle of like shorter time frame trend following traders, and then longer time frame value investors. So you may have like value investors that were buying this retracement, and then they get the move and then move higher. They may have further targets and whatnot, but say the individual names get to a place where they're like, okay, I'm going to trim some of this, or I want to short this. You have those trend following traders, continuing to pursue and make an advance. They're making gains and whatnot. At the same time, if those value investors are actually short the market, they're hemorrhaging cash, and they're bleeding out just a little bit. And those are typically where sometimes you see like local tops, even market tops. And then on the flip side, you have for bottoms, it's more so, those value investors are accumulating and they've been catching these falling knives, but those trend following traders, they're essentially super, super, super bearish on the market. And that's typically where you see market bottoms and local bottoms, right? So we think about money in the market and we think about it going in and out, but in reality, I think the big thing people mistake is that this money isn't going in and out. It's everything is being matched, like if someone is buying, someone is selling. Like there's always a consistent connection between the buyer and seller. And sometimes the the market may be going lower because those value investors, if they're not even selling, sometimes what happens is, price will just go to where they can get more people to agree on what's going on. Price is about agreeing. And then as far as volume, I think when you have, like, for instance, like this high before, like, yesterday, I guess I'm just gonna do it. I don't want to delete my thing, but let me add an indicator. Basic volume. What you'll see is that, let me delete one. You'll see is, we had volume up here, but once we got to this high and then, like, had this wick, for instance, you have less and less volume. And typically when you have, like, less volume, it's like people are technically agreeing, like people that have positions don't need to move their positions. They feel like it's unwilling. They don't have to change the positions of their portfolio, right? And then when you have, like, larger volume, that tends to be where people disagree, for instance. So when there's larger volume, you have more of those connections between buyers and sellers happening. So more people are trying to figure out, like, what's going on. So did that, kind of debunk the bull bear. It's not just bull bear, it's kind of a bigger thing of longer term versus shorter term investors / trend trading. And then we also covered volume so far. So now the next thing I would like to go into is particularly the crossroads, well, not really a crossroads that we're at now, but how I would treat a day like today, which is, you have this move down. Like, yeah, you could long for the gap fill. Yeah, you can, FOMO shorts for underneath. But in reality, we know that the only thing you can base, like, if specifically on the short side, let's talk the short side. In the last video I talked about, or on last Monday's video I talked about, you get a dip, and then it turns into a pullback, and then it turns into a confirmation of that pullback, and then you get correction. It's like each is a different level, and for now, you can treat this as a dip until it confirms something more in a higher time frame. Then you start thinking pullback, and what you're going to hear immediately is like, oh, it's a pullback, but you don't really know. But something that I am taking into consideration is specifically, I was looking at inflation-adjusted NASDAQ. I literally was looking at it the other week when I was on the Twitter community. It was like, I had a breakthrough this night, like whatever. It was literally like, I was looking at this and I was like, okay, let me just, like, look at the 3-month period. Relatively, we've been strong going up, but I was looking and I was like, I was looking at the year-to-date returns. I'm like, oh, okay, around 30%. And then I started going back in time. And then I was like, okay, when were the last times we had, like, similar year-to-year, like 33%? Because that was, like, about the highs, around 33% on the 10th, so a week ago. And then I was like, okay, so that was, 33%. That was in May of 2024. So I was like, okay, let me just go to the chart. And then I was just like, I was looking at S&P at the time. I was like, for any purpose, it would look the same. It was like May 24. That was, right about here, after we had this move down and we're here. It was like an engulfing move of all these days. We had come down, we had essentially gapped down under the consolidation, right? And then got bought back up, and that was like the 33%. And then we sold off underneath. So I was thinking, oh, like, what is, the last time we were in this type of scenario, where it was like 33%, what was the move that we saw off the high? And then I simply just, like, measured it, like there to there. It was like a 3% move. And then I was like, okay, like, in reality, that's like nothing, like, too crazy on the index. And then I was thinking, okay, like when I look at this pullback, this next one, it did here to here. I want to specifically see there to there. It was like 6%, so about twice the size. But the reason I was doing that was because I mean, I've been talking about this wave structure. That was my emergency alarm if I sleep in. But we've been talking about this wave structure and then potential of this being the wave 2. So, okay, since it's public, I'm not going to publish the video that I did specifically for subs, but there are 2 wave counts. We have one off COVID low and one off of 2023 low, right? When we talk about, wave 1, pullback, and then we're in this wave 3, waiting for a macro wave 4. But then also in here, we have, like pretty much the higher lows, broke out 1, 2, 3, a low 4, and 5. But we could also have like extended wave counts, whatever, right? All right. From there, I was thinking, like, what would a specifically like 6% correction look like off of, whatever highs we were trading? That was on the 10th. And I was looking, just measured it out. Bing, bing. 6% puts us back in like originally our profit targeting range. And then I was like, okay, so there's something in between here. Like we have the real rate of gains year to date, and then you have profit taking. But if there were to be like a pullback or like something like this that matched or greater, it obviously is coming back into this area, and that lined up to being below. So I was like, okay, so my original idea of like trimming here and then just trading it wasn't a bad idea, because in reality, what ended up happening was, we had the move down, and then particularly after this April move, you get the break and retest of high. So that's like the high conviction trade. And then this could be, like I said, it could be a 3 wave count here, it could be this move, and then we're, or a 5 wave count here, or it could be, we're looking for this move, a dip, right? A move up, small move down, consolidation. And then in this is actually like a 1, 2, 3 off the April low. And in that situation, this would actually be like just like a little consolidation. It wouldn't be similar to like this, like a 3% move. So I would be looking for specifically like, I'm looking at this 554 area. And I'm like, if this 554 area isn't it, that's pretty much when I said, hey you guys, I'm just gonna like update you guys with the levels and tell you like what I really think. And then if we want to come correct, you can use the range of April low to here, if that's like a 5 wave count. If this is down and then here, consolidate, move up, and then wants to consolidate again, and it's just being met with resistance and profit take at our 561 level, that also totally makes sense too. So for me to get a pullback, it would probably be confirm under this consolidation, right? Have to take this 554 and 550, and then after confirming that, like after confirming that it wants to be under 554 and then trade under 550 under this consolidation, that would be like, okay, then maybe we're in for a longer time frame pullback and we're coming into that area, which gives me my potential wave 4 dip areas, which is I'm thinking 534 to 540, our previous range, fill the gap. I also showed that it can come a little bit deeper into this range, so it would just be like monitoring. It would be essentially like if we start filling the gap, I mean, after here, weakness, you could trade it, and then if you start filling the gap and getting, like a low volume move back through this area where we were originally taking profit, that just signals to me, okay, that means to hedge. Like, yeah, we could still be in a longer time frame bullish structure, but then we're more likely to see a bigger move, like a bigger pullback. And then another thing I've talked about is the speculative top. And when I say speculative top, I don't mean like I'm speculating that there's a market top here. I'm saying that within the context of this local top, we've had some type of speculation activity. And on the pullback, even on the dip, pullback, or correction, since we don't really know what the structure is right now, I would say those trend following traders are less willing to take certain risks and directional bets, and that goes either way. So what I'm thinking for that is to essentially let yourself be in a position to buy dips. I think, yeah, this is a trade, it's a great, hit it overnight, like congrats. Still have a lot to go to confirm like a larger time frame move. And I'm not saying it can't happen, I'm just saying we don't really know. There's a possibility that we could see continued strength and want to see a larger move than this. There's a possibility that we're ready to come back to this area and go. And there's a possibility that this doesn't mean much and it's a back test of consolidation and we go. So those really are the perspectives that I'm managing. One last thing, I guess, on the political side is people are talking about Trump rate cuts and whatnot, and the only thing that I would be careful of, and I think this move could also just be a repricing. So you had the events that happened over the weekend, and then funds think about the odds of whatever presidency, but then what are the policy implications? Okay, if policy implication is tax cuts, some people think, that's going to really, corporate tax cuts, that's going to really benefit these corporations, and their valuations are a lot lower than where they should be, especially like with rate cuts ahead. That's one perspective. The other perspective I posited in the community on Voice, which I don't think anyone else I've seen talk about, is that we've had lower statutory tax rates over the last 40 years, and tax payments as a share, as part of the corporate revenue, hasn't really changed. So yeah, we could cut taxes more, but if the revenue if the ratio of those the taxes to the actual revenue these companies are making changes, if there's no shift, then it's kind of like we're just continuing on the same path, and that doesn't mean anything. So to a certain degree, I think between the value investor conversation, trend following thing, and that, I think that's where you see the result of having a move like this overnight. And people are like, what is the catalyst? Is it Xi Jinping? Is it Trump talking about is Trump talking about chips in Taiwan? I think this is actually just like a no catalyst event. It's just people aren't used to it, so they gotta find a reason to have people gotta find an excuse. So that is that. I'm trying to think, is there anything else? I don't know. I think, yeah. Oh, hedging. So I also had the idea, I was thinking about this 2 days ago. Okay, we moved up and moved up higher. The whole time I could have been buying puts for this move, but like I said, until we confirm something, I'm not really looking to hedge. And specifically when you think about it, when you're hedging, you're anticipating losses and trying to make up for those losses by having a position on the other side. In reality, do I need a position on the other side to make up for those losses right now? No, because it's been a while. It's probably been since the beginning of the month that I've really been saying, hey, I'm not being too aggressive on the long side, especially with call options. So it's not like I have a bunch of long positions to protect after all of this. Yeah, I could trade it. That's one thing. But like I said, confirmation is another. And then lastly, I think I'm gonna do, I mean, I've talked about the specific rotations in the last YouTube video, and, or not rotations, but I talked about the AI wave count that I'm looking at, and that how it could be in a wave one, and this is just the wave two pullback. And it's interesting because NVIDIA hasn't really done much on the weekly to be like it's a longer time frame pullback, hasn't done much to show it's like confirmation, but obviously there's like weakness in it, in what's going on. And I talked about the zigzag and potentially seeking that lower low, but like staying on that bullish wave. So it's interesting, like even with the news, how our INTC idea, even in the pre-market, is getting bid because people are like, oh, American-based chip company, that might be better, the rotation. And then think about even yesterday, Dow up 700 points, like that's a Dow name. So in reality, let me just wait for that a bit. Yeah, so in reality, it's a very interesting spot. Like I said, we can still see that sweep setup on INTC, and I'll just get more long, and just hedge back below. We could do like a little thing where we, consolidate and go. If like this pre-market move doesn't stick, what I'm thinking is I'm gonna be looking for, especially if like NVIDIA keeps selling, I'm going to be looking, I don't know if it gives a full gap fill, but there's something there like where it takes out the low at like 33, and if it takes out the low at 33, I might look at longs, for like options again with some significant more time. So that is one idea that I'm keeping on the table. And then with this AMD move lower, nothing like beyond like what I said in the video too. In reality, you have that back test of the consolidation, that top trend line, if it wants to go there, or it goes to our dip buy level. And it was like two simple trade ideas for if I wanted to get back along there, especially if, if we see some like end to the correction, or the selling in these chip names for now. We have TSM coming up for earnings. ASLM, like the thing is, everyone's like, oh, there's a catalyst. Like this was no catalyst to me. In reality, it's just how positioning works. You have people that are traders that come to the market every day that need some of them need to make money every day, and some people are willing to chill a bit. And when there's like that displacement, it does create vacuums. And I think it might have created a little vacuum. And that's not the end of the world. Like I said, local top isn't the end of the world for any of the theories I've shared, or any of the ideas I've shared. And in fact, like for instance, like INTC up 4% in the pre-market. Like I said, if chips are still weaker, if this move gets weaker, it gives us a dip buy. And that's why I'm not necessarily hedged. I'm crazy looking for downside puts for a huge correction or anything, because simply I'm in the camp that I'm gonna deploy my cash when I see fit. So I shared that idea. And then lastly, I'll do QQQ. I'll just pull it up quickly, since tech is being weaker right now. In the pre-market, significantly weaker in the no man's land between extensions, and we came to this COVID 4.618 and obviously rejected. So we have this previous high around 486, and then down here at 475 as the next major key areas. If my thing was working, I would show you guys. I don't know if they updated it. The quotes weren't updating earlier this morning. Okay, perfect. Finally. I was like, dang, why aren't these quotes updating? Okay, I have these two megaphones, and this is what I'm saying, we're back testing stuff that has held pretty well and gave moves. It's not the end of the world, especially I'm looking at this one from June, on the 4 hour. If we can test that today and hold, may be good. And then similarly, if we do something like this, where I go high. Damn. 1 second. If I go from high to low, I'll show you guys. Like the same way what are we looking on for on NVIDIA? Zigzag. So go to the high, boom, and gives us around a retest of this cup and handle on the 4 hour. If I go to QQQ, 4 hour cup and handle, exactly 486, like I said. So that's just what I'm seeing right now. It's not all doom and gloom. We have things that we can watch for a rollback, and then my QQQ level. Let me get my notes. I always write down my ideas. 470. So yeah, if it's a cup and handle 486 or not this retracement, I'm looking for somewhere in this gap to get long again. If I was looking for index swings, that doesn't mean I can't trade individual names in the meanwhile, look for relative strength and whatnot, but yeah, that's my thoughts for now. So peace, have a great day. Probably be open by the time this is posted, but this is not really like a short-term outlook type of thing. It's really for just sharing information and thoughts as to like why something can happen, and it doesn't necessarily have to be a catalyst. I don't know why this chart is not updating for me properly. If wait, because I would really show you guys this. If I do settings, logarithmic, regular. I guess I just gotta keep it on logarithmic. That's annoying, but these are the extensions. Okay, yeah, one last one. I'm gonna go through NVIDIA. Mentioned high to low to high. If we wanted to see a trade 118.29, I'm thinking like 118, like if we confirm under 120 today, I'm watching for if 118.85 holds. 118.85 doesn't hold and this low doesn't hold. Could be iffy. I don't really read too much into the expiry stuff, like what's it called? The max pain and whatnot, but max pain is pretty well below here, but yeah, it'd be like 118, 115, and 113. If not, then you got like gaps to deal with, and then this COVID fib extension on a logarithmic scale. It's not like a regular fib because NVIDIA ran crazy since then. So yeah, that's pretty much it. Peace, guys, and have a good one.